This is going to be a very interesting panel because there's a lot that's happening in methanol and ammonia markets that we'd love to talk about, especially from a sustainability point of view. Excuse me. So for those of you who are familiar with our format, we'll very quickly share a couple of things that we are seeing in these markets. Broadly speaking, right, methanol continues to grow above GDP. Methanol has a broad range of applications. About half of methanol demand goes into the traditional applications, which is really going to grow at GDP or so. So the wind washer fluid in your cars, for example, it's essentially a GDP kind of growth application. Methanol has also been used to build out a lot of methanol to olefins capacity in China. That's then, and a lot of those olefins have ended up in polypropylene markets. This was the conversation that we were having with Kelly this morning. That market, which is the third application listed here at the bottom, is kind of is capped right now. We don't expect additional growth there. But it's the energy-related applications for methanol that's where the interesting story is. Actually, methanol's been used as a blend stock for gasoline in China for a while, and that was growing a little bit, but it's really the growth opportunity around methanol as a marine transportation fuel, especially green methanol, and we'll learn a little bit more about that here. That's where the growth opportunity is. This is chemicals day, so the 50% of methanol demand that goes into traditional applications is still relevant and important. And within that, right, when we look at the big markets, formaldehyde, acetic acid, and MTBE, it's the acetic acid market where we see growth opportunities. Green methanol demand is where the interest is, and obviously there's been a lot of interest. The chart on the right shows announcements to use green methanol in various marine fleets and a lot of investment interest there. And we expect a lot of growth here, so close to 15% annual growth here through 2050. Of course, the near-term growth is what will be interesting to kind of demonstrate the proof of concept here. Multiple pathways to make methanol. If you look at the bottom far right, that's very small amounts of green methanol being produced today. Some of that OCI is probably responsible for, so we'll talk a little bit about that. Most of it is coming in from natural gas or coal, and how do you shift this mix towards greener methanol is the challenge here. And Esben will probably shed a little bit more light on this, but what is particularly challenging is the cost structure. As you can see, what we are showing here is the cost, the break-even, just the cost to make methanol from different pathways. And we are also showing that red dotted line is the average 10-year methanol price, right? So a greenfield conventional gas-fired methanol plant continues to be cost competitive at if you take a 10-year average methanol price. If you want to make blue methanol, you could still find a way to make that work with some incentives and all of that stuff. But it's once you start getting into RNG or you start looking at bio-based feedstocks, it starts getting more challenging, and of course e-methanol pathways are particularly challenged at this point of time. Ammonia, right? We're doing quite a bit of work in ammonia because there's a lot of capacity, 35 million tons per annum of Gulf Coast ammonia capacity that has been announced. A lot of that is stuff that's going to come down the pike, but we are tracking these projects fairly carefully, and we are seeing a lot of activity and interest in low carbon ammonia. There was some discussion around this yesterday on Energy Transition Day, but the driver here is potential use of ammonia as a hydrogen carrier in different markets, especially in Asia. So with that, so that's what we have. What we'll do now is let's go get started on the panel. Han, we'll start with you. Tell us a little bit about OCI, your role in the methanol space, and I know you have a slide, so if you want to use that.
Just dive right in after your. No, it's okay. No, maybe after.
Okay.
Thanks. I said it's dovetailed really well with your existing slides.
Okay.
It's like well planned. So hi everybody, I'm Nguyen, and thanks Uday for inviting me to this very nice forum. I learned a lot this morning. It's kind of a flash from the past on the petrochemical space. I'm Nguyen, VP of Sustainability at OCI. So for those of you who don't know, so OCI, we are a global leader in ammonia and methanol production. I think one of the things that you mentioned earlier, one of our all of our assets in the Middle East and North Africa are was in the JV with ADNOC. Now our stake is we're selling those stakes to ADNOC. So and in addition, we're also divesting the ammonia plant in Iowa fertilizer company to Koch. So probably once everything's closed, we a much smaller company with the portfolio focusing more balance between ammonia and methanol. So we have the continued operation will be focusing in Beaumont, where we have 2 existing ammonia lines, and we're building another 1.1 million tons ammonia facility. I think you missed our logo on that 2025, so we're the first one that will be online with a new, in this new wave of low carbon ammonia build out. So we'll be the first one that will come, start commissioning next year. We partner with Linde as the hydrogen, low carbon hydrogen producer, where they're going to build next to our plant an ATR that will be coupled with carbon capture and storage together with Exxon to send us the blue hydrogen, basically. And then we still have a couple of assets in the Netherlands. I've been with the company for almost 3 years, and it's interesting because, to your point, chemicals, like where OCI used to be, right, with ammonia and methanol being the base chemicals for a lot of the processes, were growing at GDP growth, right? But with the energy transition and the hydrogen economy, and methanol and ammonia just happen to be, 50% of the consumption today for hydrogen. And also looking into the future of all the hydrogen carrier is also being positioned as the most effective hydrogen carriers. So we find ourselves, instead of looking at 2 or 3% growth, right, on the market side, looking at double, quadruple, depending on what you believe in, right, on the new usage of hydrogen that will drive also the demand for ammonia and methanol. So that's exciting, right? Because and especially as a sustainability person, all that growth would have to come from low carbon or renewable hydrogen and ammonia and methanol growth. So I think that kind of allow our company to set reset the strategy and really focus on the growth strategy is very much focusing on that. So with the divestment of most of our fertilizer portfolio, now we could focus a lot more on the new platform of low carbon chemicals and fuel, right? Hopefully the proceed from those deals would help with the next wave of growth. When we look at ammonia, so I mentioned already on the earlier about this new plan in Beaumont. So that's something that is coming up. I really want to spend a bit of time talking through the how we view the ammonia demand landscape, right? Because we talk a lot about supply, but when the push comes to shove, probably not a lot of the projects on here will really materialize because of the demand, the lack of demand, right? So now you can go to the next slide if you can. Thanks, Uday. So this is what I try to put on the slide, looking at I used to be a consultant, so it's all about 2x2, right? So when you look at on the y-axis, the market readiness, meaning is that the demand, it's not just is the technology to drive that demand there today, right? And then is the economic, is a bit of a combined angle, but also looking at the economic competitiveness versus the existing use, right? And then there's on the x-axis is the regulatory status, like whether, because our belief is that a lot of this is driven by regulatory, right, demand, and especially because a lot of the demand that we see where things are more, where the regulatory side is more firm, then there's more likelihood of getting off-tech, etc., right? So if I start from the top right corner, where things are ready, market ready today, and where regulatory status, where the regulatory framework also supporting this, you see that it would be blue, where we see blue ammonia will have a lot of, and that's also underlying our the FID decision for that new 1.1 million tons ammonia, blue ammonia in Beaumont, right? Because we also have an operation in Europe that is exposed to the carbon tax there, right? So basically, the combination of 45Q here and the arbitrage that you have with the carbon border adjustment mechanism between in the EU when you import certain commodities into the EU, give you that kind of built-in green premium that allow you to that give U.S. production of blue ammonia a lot of advantage compared to even other regions in the world, right? And then then you see another big bubble of power in Asia, right? And probably anybody who's trying to look at ammonia is aware of the demand in Japan, Korea, that trying to use ammonia as a coal-firing agent into coal-fired power plants, right? And this is, it's not a huge demand, but relatively, compared to the rest of the rest of everything is quite big. And here, I think blue is again winning out because their CI, their carbon intensity sensitive, and not so much about the origin of the molecule. And then at the moment, it's not there. Like the regulatory stage is not yet finalized. There's still a lot of development that hopefully within this year there'll be more concrete auction being launched to allow for this to happen. And then there's more things on the left-hand side with blue, marine. A lot of people talking about ammonia being used in marine bunkering, whether it's blue or green. This is, the demand is there, right? The regulation could support it and on the blue side, not so much. But the technology is just not there yet, right? So the engine is still being tested out, and it will take a bit of time before the engine is mature and be on the water so that's kind of the way that we see where the demands are, and then the conclusion of this analysis is to say that up until probably 2030 or so, with with these different elements, we see that blue ammonia will probably be more of a winner compared to green, right? As green develop over time. But anyway, that has come to the discussion with Plug, right, on the electrolyzer side, but. Anyway, that's our view of the world. And very quickly on the methanol side, so today we are probably responsible for most of the almost non-existent biomethanol production, but we're the biggest biomethanol producer globally, right? So we produce about more than 100,000 tons, which is not a lot, but we also announced last year that we are expanding that production further as well, and that is based on renewable natural gas today, right? I think you're pretty spot on in terms of the cost. It's a pretty high cost route to produce it, but that's what available today allow us to be able to utilize the asset that we have. But we are also looking at other approaches to bring down the variable cost for the green or low carbon methanol molecule, and that's why we also work a lot with the folks at SunGas to look at gasification, because we think that and you we would wholeheartedly agree that the gasification is the best route to make methanol and to make from the cost perspective and the sustainability perspective as well.
Thank you, Han. That's helpful. David, will go to you next, and I can.
You can just run to that slide. That's
okay.
all. I just have the one.
Okay.
Thanks, Uday. Yeah, so I'm David LaMont, head of corporate development at SunGas. Maybe just to briefly introduce the company and then talk a little bit about markets here. And I'm going to speak market side a little bit more on the feedstock side than on the methanol side, just to ground kind of how SunGas sees the world in the renewable methanol space. We're a spin out of GTI Energy, which is a 80-year, I guess, plus not-for-profit research institute in Chicago. And their whole reason for being in the beginning was around supporting the early growth of the natural gas industry, the natural gas utilities, infrastructure, safety. They kind of have a history of carrying out all the research missions and policy goals of the Department of Energy and of the natural gas utilities. More recently, there's been a strong pivot related to the energy transition toward really focusing on abundant, low-cost, affordable energy. And so as part of that mission that's sort of been going on for about the last 5, 6, 7 years, we looked at second-gen biofuels. And you can see on the top right here how first-gen ethanol, a lot of education on that this morning, that was really good. That's leveling off, and there's not a huge amount of growth in oil-based first-gen biofuels. I mean, there's going to be some coming for sure, especially with the refinery conversions, but you might even see some of that ethanol getting displaced into ethanol to jet. But the point is it's had a run. That was a policy objective to build out that industry. That's leveling off, and great news, right? We got 6% of the biofuels now, or 6% of the transportation fuels are biofuels. So SunGas was looking at where that next wedge is going to come from, or could come from, and the short answer is low carbon feedstocks are out there in the woody biomass space as well as the municipal solid waste space. We focused our early efforts on biomass, and that you can see in the bottom left here has quite an enormous production potential for adding to the next wedge of low carbon energy and fuels. Across the United States, you have managed forests all across the U.S. Southeast. You have, the Midwest, ethanol and corn and agricultural industries provide huge amounts of residues. Out west in California, you have orchard-based crops that provide a huge amount of woody biomass. All of that material is available to be feedstock for producing renewable fuels. DOE studied this quite a bit. They do their billion-ton study that you may be familiar with. We at SunGas have kind of unpacked the billion-ton study, just conservatively looking at what could be easily available, easily accessible, has the right fuel properties for our particular technology platform. Easily, we're in the 200-300 million ton a year available biomass range without impacting traditional uses of biomass like pulp and paper, without impacting high-value timber products industries, engineered wood products. And all of that can be put to make biofuels. And you can see here on the bottom that could be a pretty big displacement of conventional fossil supply, or augment traditional fossil supply in quite a big way. Just looking at U.S. demand here for traditional aviation fuel, if we were to convert that to SAF, it could be a pretty big chunk. Same thing if you look not at the current 100 million ton a year methanol market in the chemical space, but looking at the fuel space, and where that could be growing as a trajectory into the 400 or 500 million ton a year demand. This could still be a huge part of that future larger demand. And then lastly, where we thought we started SunGas would be in the RNG space, given that gas utilities, our heritage coming out of GTI Energy, doesn't have a lot of options for large amounts of renewable natural gas. Hydrogen is a long way off, has challenges with infrastructure. We thought we would start there. We're still looking at that quite heavily, but the regulations and the regulatory environment is tricky, both on the regulations around pipeline safety, but also the regulations on utilities' ability to buy expensive green RNG. Nevertheless, substantial amount of potential displacement could be had there. And then lastly, so on the methanol side, that's where we've launched the business, right, through our work with a really good ecosystem of potential suppliers, ourselves, OCI and others, obviously Maersk and others anchoring the demand side and putting our heads together collectively as an industry to build this out. And as Han said, very much in conjunction with the regulatory environment, both in the US and in Europe, that are going to backstop the initial capital investments into these new facilities. So lastly, on the bottom here, our launch project is called Beaver Lake Renewable Energy. It's about a 475,000 ton nominal capacity green methanol project that we're going to build in central Louisiana, right in the middle of the managed wood baskets of the Southeast, which is, a dozen states or so that have a century-long history of sustainably managed renewable forests, and do that in a way to create a lot of economic value in the regions where they exist. So we're leveraging right on top of that. Kelly earlier was talking about challenges of putting new infrastructure of this kind into areas that don't traditionally have it. Yeah, we're not that far from the Gulf Coast, but we're far enough away that it's still a bit of a challenge. And so we economically have to position these facilities where the feedstock is. It's the low energy thing, and we're moving it up to a higher energy fuel at the end. So moving wood is a lot harder than moving methanol. So we're going to be building these plants across the wood basket. That's probably enough to talk about now. I'm sure we'll have a good discussion.
Thanks, David. Esben?
Thank you. Yeah, this is a little slide about me. It's basically a copy of my LinkedIn profile, but I actually did have a point that made me bring this slide. You can see 31 years with Haldor Topsoe. Out of these 31 years, I would say I spent between 25 and 28 working with natural gas and natural gas conversions. And the last years at Topsoe, I gradually moved into blue and a little bit of green also. And actually, I really felt that I had a good understanding of green technology at that time when I left Topsoe. But changing to a company like Plug Power, who has progressed much longer into the green transition than Topsoe, I learned a whole new set of facts. And so maybe you can bring on the next slide. And what I thought that I knew previously and learned afterwards was not entirely true. I formulated 5 myths about the green transition. I put green ammonia, but it could equally well be green methanol. And I'll be happy to discuss any of these myths that is shown on the screen here. Maybe I should say a little bit about Plug Power, since it's probably not known to everybody. So Plug Power is a company that started in the fuel side end of the hydrogen business space. So we developed a business concept where we replaced batteries with fuel cells for batteries for indoor truck lifts. Obviously, indoor you don't want diesel truck lifts. So what we did when we replaced the fuel cells into the batteries, in the first place we had to put a big metal block inside there to fit the remaining space and get up to the normal weight that the truck lift was used to. But on top of that, there were a number of benefits. The truck lift is running much faster, much longer between recharging. Recharging that's not recharging, it's refilling. It's like refueling your car. So people were very happy with this, and I believe that the companies like Amazon and Walmart and Home Depot, they only use truck lifts that are running on our fuel cell driven engines today. And so this became a big business success, but then our clients asked us to take on more and more responsibility, local storage of hydrogen, sourcing hydrogen, transporting to site, producing hydrogen, and eventually also going into green. And that happened around about Corona time, and the company went out and said, okay, let's see where we can buy some green hydrogen, and that turned out to be almost impossible. So then they made sort of the next best decision, which was to acquire electrolysis technology. And they looked at what Department of Energy recommended at the time, and at the time, GINA was Department of Energy's best technology, or that's what they thought was best. So they acquired GINA, and that then became the start of the adventure of going into the green hydrogen space. We just started up our own 40 megawatt hydrogen facility in Georgia in January of this year. It's producing 15 tons per day liquid hydrogen to our own consumers, all these places where we have fuel cells across the country, where we are responsible for delivering hydrogen. We're supplying that into the market. We're starting up 2 more facilities later this year, 120 megawatt up in New York, Buffalo, New York, and another, I believe it's also 120 here in Texas. And we have various other places across the globe where we have projects in various levels of demonstration. So I think that's actually, a proof that the first myth here is definitely not true. It's for Plug Power, it's not only a talk, it's also action. But again, I'll be happy to discuss more about these things. I might want to add that I'm very much in agreement with your analysis, both you, Hahn. I think that blue technology is really a transitional technology, as I pointed out a couple of times, both yesterday and 2 days ago. It doesn't have blue technology, it doesn't have the full greenhouse gas benefits that green technology has, but it is a good transitional technology, and I think for the next many years we'll see predominantly blue projects. We are not looking to capture 50% of the market anytime soon, but if we can get somewhere between 1% and 5% of the market, we are very happy, and that would correspond to a huge annual growth on our technology side. And with regards to you, I also think that biofuel has a big role to play. I just want to mention that you need hydrogen. When you gasify your feedstock, then you end up short of hydrogen. So I'll be very happy to collaborate with you guys as well.
Yeah, for sure. Can I just build on his answer today?
Sure,
yeah, because you said a couple things. We all can mix with each other's technology platforms, right? You can integrate electrolysis with gasification. You can use gasification to feed an existing methanol facility, so there's a lot of overlap and future optimizations it can have, and it all relates to not blue, green, whatever, renewable versus fossil. It's going to relate just like it does in traditional. How fast can we get down the cost curve? Obviously layering and respecting all the regulations that we have to deal with both in the States and in Europe, but we're starting somewhere, right? It doesn't have to be perfect, it has to be good enough for now just to get launched, and I think we're launching.
I like this, the self-perpetual machines are difficult to find, but this seems to be like a self-perpetuating panel session, so you don't need but this is great build. I appreciate that actually. But Esben, I've been fascinated by Plug Power for a very long period of time, right? I mean, in many ways, it's been very interesting to see the company. I think this version where they went and looked for green hydrogen, couldn't find it, and said, screw this, we're going to build it ourselves, is incredibly risky, but incredibly bold as well, right? And so I'm curious, right? Like, how is all of that panning out, right? I don't want to convert this into a hydrogen panel. We'll pivot very quickly, but I'm very curious about that.
You're completely right in your analysis. It was a risky decision and bold. And what happened was that the owners decided to put down $5 billion to do this investment. And this money, it's almost spent now. I wouldn't say it's almost spent, but we're down to 1.5 instead of 5. And that's because we have made huge investments in the industry. We have built our own 4 gigawatt electrolysis stack facility in Rochester, New York, and I think you will find that this is by far the largest plant available in the world. Having said that, it's not enough that you have the stack available. We also need to build the units around the stack, so we actually can convert the water to hydrogen, provide the utilities, etc. And we have developed a concept. And the way we did that was we acquired a a Dutch company called Frames. It's today called Plug System Solutions, and they're responsible for the balance of stack operation, or design and construction. And what they did, the business model that they took with them, is they made strategic alliances with a number of workshops across the globe, and we have simply adopted that business model into our business today. So we are able to match the 4 gigawatt on stack capacity. We are able to match also on the balance of stack plant. So this is a scalable, one is sort of a serial production facility, so all these stacks, they are being produced, just for storage, and we don't really care which stack goes where. On the balance of stack side, it is still a little bit dependent on the client. There will be some adaptations to the individual clients, but the various workshops that we made alliances with, they know our technology and know also how to adapt it. So yeah, a little bit long answer, sorry about that.
No, that's okay. So I want to pivot to electrolyzers for chemicals and petrochemicals, right? And a lot of people don't realize, but like Europe used to run alkaline electrolyzers for a lot of its ammonia plants until, as late as the 60s, right? And then we slowly started pivoting, right? So I guess as you are trying to sell electrolyzers into the chemicals, petrochemical space, what are you learning? What are you finding out?
Yeah, it's difficult because there's this myth number 4, the economics doesn't add up. And I have to say it's true in 95% of the cases. In 95% of the cases, it's much cheaper to go blue or gray. The challenge is really to find the places where it does matter, add up. And it's also, there's this story about if you want to transport knickers a pair of knickers from the place where it was produced to the consumer, and you want to do that using green fuel, then the additional cost that you have to put on your knickers is 10 cents. And so this is obviously a place where it makes sense to go green, because the producer can go out to the consumer and say, hey, this pair of chiggers was transported using green fuel. So all this CO2 emissions relating to this long-haul transportation, you don't have to worry about that. And there's a lot of people out there who want to pay this extra 10 cents for having this knowledge, right? So I think it's about identifying the places where actually there are people who want to buy the green premium. And I think it's very uncertain what the green premium is. But if you look at sustainable aviation fuels, that's a place where the market has already been established. It's for sure 200%, and it's probably going to be, at least for the RFNBO-based sustainable aviation fuel, it's going to be even higher than 200% green premium. So if you can sell your product as three times the normal price, then you actually have money to pay for this higher production costs, right? In ammonia, it's less clear, but my expectations is that the green premium we'll see in the next few years is somewhere around 100%, maybe a little bit short of 100%. But it's still good money.
Thanks, Esben. So that's interesting, right? So, Hahn, going back to consulting speak, right? It's a customer segmentation problem, right? Like, how do you find the customer market segments where there is this willingness to pay a premium, right? And right now, OCI is, making some green methanol that is being used for marine transportation. So, could you talk a little bit about that, and especially around like plans to scale up, or maybe challenges associated with scaling it up?
Yeah. So yeah, no, it's interesting. On the demand side, right? It's always the kind of the chicken or egg issue. I think for us, where the demand that we have for the methanol today, the green biomethanol today, is very, very little actually going into marine.
Yeah.
It's make the story, but it's really the one-off sales, etc. Right? But the real demand, consistent demand, is actually going into Europe for the equivalent of the RFS program that they have in Europe, called the Renewable Energy Directive, right? That mandates certain amount of fuel being blended into the fuel pool, being renewable fuel, and basically, the biomethanol is qualified as advanced biofuel, which is the equivalent of, D3 RIN here, right? So that kind of arbitrage between the the gray price and the premium on the tickets, right? The bio ticket side, make up for the increase in cost of buying biomethane instead of renewable natural gas. And the slide I was showing earlier was really where we as a company see we believe in the market that have regulatory underpin, right? And unfortunately, that's not happening in the chemical sectors, and most of that is in the fuel sectors, right? Be it so the only place where you have, let's say, more chemical demand is the European ammonia demand because of the ETS, the emission trading system scheme, where all the ammonia production plant in Europe have to pay carbon tax, right, for all the CO2 that they emit, and then also all the ammonia that is imported is also have to pay for the CO2 that is embedded in that ammonia. And the CO2 tax today is about 70 or 80 bucks and could go up to 100 or even more, right? So that gives you that kind of build-in that you could believe in, right? Because regulations should not change. Typically these directives last for many years. I think that's where we see we've tried to find the area where you have you work back from the regulation, what does it mean in terms of demand, and of course, the technology still have to come there to be able to use it, right? So on marine fuel, right? So you look at methanol is a lot more mature. There's methanol engine already been on the water since 2015. So now we're on third generation methanol fuel engine, so the number of ships that been ordered, right? And with Merck's having ships actually on the water that we supply the fuel for. That's is real. We see that demand is real, right? And that's also underpinned by the Fuel EU Maritime, which is the legislation in Europe that demand that ship has to reduce their carbon intensity of the ship on the life cycle basis, by a certain amount every year. So that provide also that mechanism. Otherwise, they have to pay a fine, right? So that fine kind of can help you translate back into the affordability, right, of that more expensive fuel would be. So that's allow us to make the business case and pass.
And so, but today you're essentially taking renewable natural gas and converting it all the way. That's the pathway.
Yeah.
Any thoughts on like willingness amongst the marine players to pay a premium for that? So this contract, for example, or this commitment that Maersk has, for example, in this space, how is pricing there linked?
That was something we were discussing yesterday, right? I think it's an interesting thing, like that's the affordability thing, but of course you come down to supply and demand, right? And what is customer willing to pay. I think we still have a couple more years before the Fuel EU Maritime become real, right? And the IMO is supposed to be working on some kind of target as well. So 2026 is when it starts to kick in, but it's only start with a 2% reduction, and you could do a lot with your energy efficiency on board, and even using LNG would get you to that 2% reduction already, right? Now what we see, at least from our experience with the shipping company, right? Even though they order the ships, they are looking around, and as I would be doing the same thing, right? You scout the world to see where can you get the supply, and the U.S. is not the only game in town, right? There's also China that you talk about all this MTO capacity, right? And there's a lot of idle gasification to methanol, the technology, there are plans, and also a lot of you guys know the landscape, right? But we're talking about our customer are throwing out numbers that are pretty ridiculous, right? And how real are those numbers is to be seen. But obviously, it's also slowed down also the willingness to sign the long-term offtake contract, right? Because they're seeing numbers, and also on the electrolyzer side, right? China is also a very they dominate the electrolyzer market from the alkaline side, and from my experience in the petrochemicals of the past is there's a lot of economic irrationality sometimes, right, that you can't compete with when you're trying to compete from Europe or the US. So I think the next few months I think would be pretty pivotal in terms of that kind of firming up the numbers and being able to get people comfortable enough to sign an offtake, right? Because we think what we have is real. When you look at gasification or RNG, etc., is and the ability to get certified is also important, right? Because that's also you need it in order to be able to get the premium.
But I guess I understand that it might be hard to say what that premium might look like, but is it safe to assume that there is a premium?
We have the premium today, right, under the road market. I can't tell you because, but there is a formula to that, right? It's an open, it's a transparent.
Esben was talking about like 100% premium, right? Are we in the ballpark?
Obviously depending on the underlying commodity, right? I mean, sometimes it's 100%, 200%, or whatever. Like it's also depending on ethanol price. So that's because ethanol is your kind of
competing
competition. So it depends, right? But that definitely is enough for us to be able to afford the RNG that we buy here and convert it.
Okay, thank you. That's helpful. Esben, you had a comment?
Yeah, I just wanted to comment on this Chinese electrolyzers, and I think you're definitely right. I believe the largest electrolyzer plant is located in China, but latest news is I heard that it's only running 10%. So it's not really, you know, not all of this is completely logic from our perspective. But one thing that I find is that the market is very divided. So we don't do any business in China. This is sort of a strategic decision from our side. But actually, we see very little competition also from Chinese companies in the markets that we are. So I think it's they are serving their market and we are serving our market. It's not completely true, but it's probably 90% true.
David, so from a scale-up commercialization point of view, what are SunGas's next steps, right? Raise money, raise a lot of money?
Yeah, I mean, I just could leave the stage and I'll put Kelly up here. I mean, we're going through the exact same, we were talking at the break, we're going through the same history, right? There's no merchant any of this right now, right? You've got to get contracts in place on the feedstock back-to-back with the offtake, back-to-back with your engineering and capital costs, and all of that has to, and regulation and certification, that has to come together now. But they're large capital projects, and so none of that starts creating real value until 4 years down the road when you've actually turned the plant on. And so there's a whole lot of stars that you're trying to make align all at the same time, and that's where we're at. We're moving through the development phases of this project. We're just out of FEL 2, going into FEL 3, trying to get to FID on the Beaver Lake project early next year.
Yeah.
And
so,
go through a conventional
David, what
project
do
finance.
costs look like, right? I mean, you know, we basically talk to a bunch of EPCs and they give us a number, and then we'll validate that with conversations with a few more EPCs, right? Mm-hmm. But very few people have actually built a gasification plant, have actually built a project of this kind recently, right? Mm-hmm. So what do capital costs look like? Are you finding that are there surprises based on what all the work that you've done so far? I don't know if you want to share your capital cost numbers. I understand that, but I'm curious, right? Even if you can provide some qualitative color on what do costs of a project like this look like, that would be very interesting.
Yeah. So it was on the slide, so I'll share it.
Okay. I'm sorry. Then I should have paid more attention to that.
Yeah, so coming out of FEL 2, we're looking at a TIC of 1.8 billion for the facility.
Okay.
Yeah, and we're working with Kiewit as the constructor, right? So let me talk a little bit about how our business model is trying to address this question. Mm-hmm. There's a lot of methanol plants that have been built. A lot of people know how to build that, right? The downstream part of this plant looks very typical and conventional, even at this scale, which is a little bit smaller than a mega methanol facility, but it's all well known. So it's all about the gasification, the integration, the balance of plant. And so we SunGas are a technology provider as well. We have a sort of a two-pronged strategy of, we took the technology out of GTI and we've productized that. We call it our S1000. That's a standard design, right? So we've engineered, productized that. We've built a supply chain around that. We've got engineering partners to help us deliver that. And that helps support financeability both for our own project and our customer projects as well, because we can put real performance guarantees around that. And when anybody that's doing project finance is looking for that financing, they're going to ask about how it gets guaranteed, right? How does the process performance get guaranteed? So we support a huge amount of that through our ability to put a guarantee on that part of the facility. And that allows EPCs, at least the few that are left that'll do LSTKs like Kiewit, to put an LSTK together around that. So front end, address the technology risk, work directly with the constructor first, work on the engineering in the middle, but the construction on the end is the other side of this equation, right? We started with constructability and with a constructor more than we did with an EPC, because you got to build it. And so we want a long-term relationship there with Kiewit. We have a design one, build many approach, which is enabled not just by our strategy, but by the fundamentals of the wood basket and then the properties of the biomass, right? Wood is wood is wood. So you can really standardize a plant design and make this look a lot more like an NGCC type of business model instead of a custom chemical plant model. and we can work down the cost curve more quickly that way. And to the extent we can do that with a construction partner that'll be with us all the way along, that'll be really beneficial.
And that cost estimate, has that changed given all there's been quite a bit of inflation that we have seen with capital costs, right? And so when you conceptualize this, let's say a couple of years ago, I'm assuming it was a lower number, or it hasn't changed much.
Yeah, no, it went up okay. A bit, but not as much as we think. And one of the reasons for that in SunGas's case is we've been incredibly lucky to be well capitalized, and so we did a really good FEL 1 and FEL 2, right? We didn't skim through that like a lot of developments have done, and then they crash in FEL 3 or they crash at FID, or worse yet, they crash in execution. So we're taking a lot of those principles that a lot of our our team members have from our experience in large integrated oil and gas companies, and really worked hard on the front end development to make sure we answer the questions, not leave open things for FEL 3, spend the money that needs to get spent to define the design.
Yeah. Excellent. Let me open this up.
Can I just say one thing?
Sure.
Yeah. I just want to thank you for being able to sit here. I think that there are various conferences out there, that there are conferences where the organizers are really trying to make a lot of money, and then there are conferences like this one where you are clearly aiming for quality of presentations. So I'm very impressed with the program over the 3 days, and I also am very happy for this highly qualified discussion. I'm very humbled to sit here. Thanks a lot, Uday.
Thank you. That's high praise coming from Esben. He's a deep thinker and a difficult man to please, trust me. Let me open this up and see if there are questions from the audience. Sure.
I mean, I saw one note on the project that is coming in China, that Esben, as you had mentioned. It's a clear example that the project is operating at 20% of its capacity. There was a few challenges that had in the project, and it was when I was in Middle East actually a couple of months back, when we had a look at the issues that was happening. Now, one of the things that was the major challenge in that particular project was mainly related to the type of power that gets into the electrolyzers. Most of these alkaline electrolyzers that is supplied at the site, they are not able to operate when their power reduces less than 50% of the capacity. Now, the issue what happens there is that they have a mix of wind and solar, and both of them are not reliable. Now, my question to you would be that, Esben, how is Plug Power trying to manage, when you try to produce green hydrogen? The idea is that you try to get it from the renewable sources, and how are you able to manage the production with a very highly variable source of power that you get into your electrolyzers?
Thank you very much for that question. I think that there are two aspects to this. One is the technology related, and the other is sort of the power supply itself. But if we start with the technology related part first, PEM is actually much better capable to handle variations in power supply. We can start up a unit and bring it to 100% operation within about 5 to 6 minutes. And we can go from maximum to minimum load of a unit within 1 minute, and the other way around again, so go up again also another minute. So we can really adapt to whatever power is available, and it doesn't really hurt our aging or anything. So it's our guarantees are not related to whether you have 1 or 2 cycles every day or something like that. But so if we build a 1 gigawatt factory, we would probably have 100 10 megawatt units sitting next to each other. This means that we can go down to minimum turn down ratio on each of those, and because it's so easy to switch it back on, we can just take them out of operation. So we can cover the entire range from 0.1% to 100% easily. Then there's the other question, which is related to the power supply. Of course, I mean, it is painful that you need to find out what capacity to design for. If you have a peak capacity of, let's say, 1.2 gigawatt, and you design your unit for 1 gigawatt, then there will be a period of time where you have power that you don't really utilize, right? And on the other hand, there will also be times when you don't have this 1 gigawatt available, and then you have capex standing there to no use. So it is a big challenge. And therefore, what we are seeing is that most of the projects, they are grid connected. So they have a grid as a possibility for backup. There might be some on-site power generation, or let's say specific for that project, power generation, but it's typically connected with a grid, so that we can assure that we always have, let's say, 30% power available. And one more thing I should mention is actually that our electrolyzers are operating more efficiently at low load, which is quite surprising to many people. But if it's only operating at 30% load, then it's actually about 10% more efficient than when it stops operating at design load.
Thank you.
Hi, this is Michel Killa with Honeywell. I have a question to David and Hannah about the biomethanol, and it's clear that the main market and main offtakes at this stage is by companies like Maersk for marine fuels, and this is what's driving the biomethanol production at this stage. But are you also exploring other passes from biomethanol, like methanol to jet or SAF, and would this be like a commercially viable path or approach that you are exploring?
Maybe I can start. So actually, the main market that we're selling our methanol into today is into road transport in Europe, right? So known fact, actually probably most people here know that, but methanol used to be used as a blend stock here too in the US until it was banned. But in Europe and the rest of the world, actually, methanol is still being used to blend into fuel, right? So that's something that we see, as a market that exists today, and potentially could still grow a bit more as more member states, open up their fuel pool to accept methanol in as well, right? And then other use, there's chemicals uses as well, to a certain extent. Like we do have some sales into the chemical sector, but again, this is very far and few in between. For a while, there was quite some excitement around MTO in Europe, right? Because looking at the other routes to make, to your point, what Kelly was discussing this morning, that you come to your wit end at some point, trying to recycle plastic, right? So using, we were developing a project in Europe to look at gasification of municipal solid waste, and then the customer would be an MTO plant. So that would be a way, and in the end, it's quite similar on the cost basis with pyrolysis of plastic, right? So that's another route, but unfortunately, that project, is for various reasons not going through, I don't know, the jet part is not yet approved yet, right? So I'm not sure what the latest on that is. Maybe you have a better idea, but So we look at marine. We also look at inland waterway as well. So we work. So in Europe, for example, we move a lot of methanol by barge, and barge is also part of the renewable fuel directive as well, right? In the scope. So we actually work with our barge, we charter a barge and charter that conversion of the barge into running into methanol. So then we use our own stuff, right, and generate the tickets that way.
Yeah, for SunGas, for sure, we're looking at other fuels, not necessarily methanol to jet, but your question brings to mind a reason why we're looking at methanol first. Number one, it's like Hahn said, it's a pretty simple molecule to make, pretty simple molecule to certify, pretty simple molecule to move. We would have to partner up most likely with somebody that would help a small company like SunGas through the process of getting SAF certified through our technology pathway. So we're looking at it, not just methanol to jet, but if these plants are going to have to be financed on long-term offtake, we don't have the option to say, hey, we're going to do methanol now, and then in a few years' time we'll switch to methanol to jet or something like that. We have to backstop a whole plant build against a contract. So if we were to do any sort of SAF project in the near term until the market is mature and we're rich enough that we can merchant build a plant, it's going to be with a partner that wants to buy that fuel for an extended period of time.
So question, Kyle?
Yeah, hi. First, thanks for your time. Question for Hahn on an earlier slide you presented, and this is more educational. You mentioned one of the biggest opportunities is for ammonia is coal-fired plants in Japan and Korea. I'm just interested if you could talk a little bit more about that. And then secondly, are the plans for that ammonia to be imported or manufactured locally?
Yeah, so I think, but the technology, then you look this up, right? It's basically I'm not a chemical engineer, so totally butchering this now, but you'll basically be spraying the ammonia into the firing chamber, and because of the hydrogen is allow you to get the energy out of it, right? And it's up to now, I think they've tested the assumption is about 20% is what they are looking at, right? Replacing 20% of coal with ammonia, and then I think there's also tests that you could do this up to 40%, 60%, etc., right? And also with gas turbine as well, so lots of developments there as well. And you could see that the Japanese technology providers are also developing this with an eye to export this to other gas fire places, right? So because this could be retrofitted, the existing power plant could be retrofitted to use this, right? And then of course you have to look at the NOx emission, etc., to deal with this. To be honest, I think it's all import. I'm not even sure if there's going to be any local production of ammonia. So that's basically a way for Japan to try to import energy in a different form, right? Or renewable energy in a different form. So.
I can confirm that. No, they're not looking at local production.
Excellent. Let's one more question.
All right, thanks. This question is for Esben about green hydrogen electrolyzer. Where do you see the, potential breakthrough in terms of either technology or other factor that get the cost down? Is the current density, or is the stack design, mass manufacturing, or if it's in other area like very, very low electricity?
Our stacks are actually already running at very, very high energy density. We can current density we can go up to 6 amps per square centimeter, but it's probably not the economic place to operate because it costs on the energy efficiency. So I think that probably the economic optimal is a little bit higher. So I don't think we'll see any benefits there. We will see some benefits on the design of the membrane itself, so that the stack becomes more efficient. And of course, when we built our gigafactory in Rochester, we saw a huge cost reduction. Right now, this plant is operating at 0.1 gigawatt per month, so that's 1.2 per year. If we see the need in the market, then we'll ramp up production up to these, let's say, 4 gigawatt, and that will of course reduce the costs of our stacks even further. On the balance of stack side, we're also seeing benefits on the transformer rectifier, for example. Today, the largest transformer rectifier that you can get, which is, let's say, well proven, is 5 megawatt, but there are definitely trends towards getting larger transformer rectifiers into the market that are well proven. So there will be something there. We're monitoring that quite closely. And then on the balance of stack side, I really think it's to a large extent economy of numbers instead of economy of scale. It's economy of numbers. So really we try to make as compact a design as we can, and of course make it as cost efficient as possible, and manufacture it, on assembly lines and things like that. So we see great potential for cost reductions on that side as well. So it's really a mixed bag, I would say.
Excellent. Let's break for lunch. We'll reassemble at 12:30. Terrific keynote coming up with Jim Simon. So looking forward to that. Thank you.